Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about risk management, right? Lots of traders will always talk about profits and wins and things of that nature, but I believe that managing risk is actually one of your keys to one, surviving the markets, and two, being able to actually profit from the financial markets. So that's what we're gonna do today. We're gonna go over a GBP USD buy that I took on the 29th of March, and we're gonna go over my entire risk management approach to that trade from start to finish, how the entries were, multiple areas where you could have entered the trade, how to manage it as it is moving, whether that is in your favor or against you. You have to manage it in both scenarios. And yeah, that's essentially what we're going to do today. Right now, we're looking at gold. Just wanted to point out that this is an important area that I'm actually already told my group to monitor, because this is indeed structure which was responsible for a break. So monitoring this area makes perfect sense, even though there is a POI just above. This one over here is just absolutely perfect for you to try and take sells, because there is a good probability, once again, not with 100% guarantee, that this is going to drive down now for a bit, especially when you consider time of the day and time of the week. Day of the week, which is also very important. But once again, you might want to see some sort of confirmation in the lower time frame, which is something that I teach in the mentorship. So you have to be waiting for that. Otherwise, it could just blow through your POI and tap deeper, because we do have some imbalances, Asian high, things like that, right? So but once again, that's besides the point, right? If you want to learn about risk management, make sure you stick through the entire video, because I'm going to be walking you through my entire thought process when it comes to managing positions. So with that being said, let's actually get started with today's video. So traders, we're back on the chart. We're now looking at GBP USD. The trade that we're gonna go over was taken over here in this POI, this candle to your left. This is a POI, and we're gonna get into these specifics in a second. But for now, understand that I do have a screenshot that was sent out to the community. As you can see, I mean, it's quite difficult to see and read, but this is GBP USD. If we actually grab this, this is GBP USD on a 40-minute time frame. You will see the same trendline liquidity over here on my chart in a second, and this is the same POI that I was willing to monitor, right? It doesn't mean I'm gonna be necessarily executing positions. It just means that that particular area is gonna be an important area for me to monitor, right? So we're gonna go back right into the charts, and we're gonna sort of go over the trade, right? So let's see over here. Let's remove that. In terms of the POI selection, I think it should be pretty straightforward. There should be really no confusion in terms of why this particular POI was selected, right? If you look to your left, internal breaks over here, trend and liquidity up above that, and the particular day of the execution, Asian low taken, it was just picture perfect for you to try and take a buy, right? Doesn't mean it's gonna run forever, but you have a good probability of seeing some bullish mitigation, right? So we're actually gonna be using the replay tool, and we're gonna be going over the trade. Once again, I'm not gonna get into the entry and things like that, but I'm gonna give you some ideas over here, right? So this was the mitigation low at the time. As you can see, this was below Asia low liquidity, so this is great. And you can see we tap deeper, we hit a key level, right? 1.30500 pretty much, and we start moving in the opposite way. We clear some internal structure, we start building liquidity, which you will see in a second, which was also an important piece to this trade. And if we replay price action over here, I want to once again focus on the risk management side of things. So we're gonna let this play out to the point where the position was pretty much executed, right? But this is a bit late. I was already in somewhere over here. Once again, I broke this trade down for my community, but I was somewhere over here in the trade, and my thought process behind this trade was to possibly, if we go back to the 10-minute time frame, was to possibly, once again, we did have some Asian highs over here. Completion was set at this particular high, but idea to take profit, obviously. Um, this was an important area. If I would have seen some sort of rejections or were essentially not accepting this area, then I would have not hesitated to close them out. But for the most part, I wanted to get to this block over here, and then we shall see if I can take profit, if I can do any all of that stuff, right? So let me quickly remove that because this actually moved too fast. And we're gonna go with the replay tool right over here, just as the trade was about to be executed. And if we speed this up over here, okay, so at this exact point, once again, I was already in the trade, and my thought process was the following, right? Once we trade up off this high, right, I need to monitor what is gonna happen over here. This being your most recent lower high into your POI at the time, right? I mean, you can see the red box over here. So this is your external leg on this particular 1 minute time frame, right? And once again, you look at this and you say, okay, trend and liquidity being squeezed, internal breaks, more breaks. There was essentially a very, very good entry. Once again, not something that's very frequent in terms of the delivery in the mitigation. But as I always say, every mitigation is unique. So you have to adapt, right? And if you believe that the POI is going to hold, you have to look for a way into the trade, right? Because you're not always going to get the perfect mitigation that's going to allow you the perfect entry with a tight stop loss, right? So the first thing when it comes to risk management, obviously, let's say as an example, the entry was taken over here. You have to put your stop loss below the mitigation low, right? Unless you're going to be putting it below this short-term low and accepting the fact that that can very well get taken out into this block, which should then hold, right? If we're moving up, this is the block that should hold. This right here is irrelevant. This can get very well taken out and we can still move up, right? So my thought process in this trade was essentially, okay, so I'm going to split my risk because obviously putting your stop loss below the mitigation low over here gives you a 24 pip stop loss, right? Not the best thing. So what you can do is split your risk, right? You can say I'm taking 0.5% risk over here with my stop loss a little bit tighter below the mitigation low. And if that gets taken out, I will have another entry ready over here with my stop loss below the mitigation low. And this is the one that should work if we're indeed going to be moving up, right? So as an example, if your total risk for a given trade is 1%, right? Let's say you have a rule in your trading plan which says, hey, I'm taking 1% risk per trade, and you have a scenario where putting your stop loss below the mitigation low is just too far away for you, then you can apply what I've just explained to you, right? You can split your risk and put a stop loss here, knowing that it can very well get taken out, and that you are essentially splitting your risk, putting 0.5 over here. And if that fails, you know that the rest of your 0.5 is going to get triggered over here, right? And if that fails again, then your trade idea is wrong because you would have traded below the mitigation low, and you need to restart thinking the POI, how are things moving, where are we creating liquidity, where is it being grabbed, and things of that nature, right? So once again, in this particular scenario, I was half risk in this entry because it's very risky. I know that my stop loss can get triggered if it's just below this short-term low, right? So the first idea was to get over here, right? But once again, this is where you ideally want to hit, and this is where based on your higher time frame price might tap into, right? But what I want to say is the moment we traded above this internal structure, my stop loss went absolutely to break even, right? Reason for that is because the market has given me signs that I'm correct and I'm not willing to give my profits back to the market. This is an issue that I see very often. Traders just thinking that every trade they take, the market is going to provide them with a 1 to 30, and that if it's not a 1 to 10, I'm not closing anything, right? And they let just those 1 to 3, 1 to 4 consistent positions that you can achieve, they let it just go all the way back down to the stop loss, and they take a loss on a trade that was actually giving them quite a bit of profit. So my philosophy when it comes to mitigating my risk is that I'm very skeptical, right? I know the market is very curious and it likes to tap zones up and down, and I'm not gonna sit on a 1 to 5 expecting it to just continue running, right? So at this exact point, my stop loss went to break even, right? It would have been much better if you wait for the actual structure to break right over here. But at that point, due to the risk to reward that I was achieving, I was okay with that, right? And essentially, partials were taken. Once again, you look to your left, and I'm not going to get into too much detail, but we have an important area over here based on that imbalance to the right. So this is where the first profit taken point was achieved, and then you try and partner that with a key level, and by key level I mean a round number such as 1.31250, right? Makes sense. You can try and target there as a first take profit, and if you achieve that, you can then decide if you want to keep trailing your stop losses, right? Because ideally what you would want to see in this market is you would want to see it push up, break structure, maybe retrace a bit, and then go and break structure again to the upside, allowing you to put your stop loss over here, making sure you are securing the most amount you can in that particular position, right? Because you cannot control what the market is going to do. You can just put yourself in the best position to win and in the best position to secure as much profit as you can, right? So if we play this straightforward, this came straight back down and essentially stopped me out after achieving the first take profit over here. I knew about this area. This was concern, but I was okay because I'm not going to be securing here and then securing up there again, right? So you have to keep those ideas in mind. And essentially, if we play this back, if we continue playing this, price essentially, what's this? Played back down, stopped me out, which is okay, and continued pushing even further, because that's the risk that you're taking when mitigating risk, moving your stop losses and things of that nature, right? So you have to accept every time you move your stop loss that price can just hit it and continue as you anticipated. So I'm not mad, I'm not confused, I'm not irritated by the fact that, hey, shit, right? The market hit me out, stopped me out, and it continued up, right? Because I'm accepting that that is a probability. It's always a probability, right? But I'm securing myself profits and I'm making sure I have a positive outcome every time the market allows it. And by allowing it, I mean the market moving in the direction I've anticipated. I'm making sure I don't take a loss and I'm essentially banking profits, right? That is very important. It will keep you in the game. I don't think there is a reason to just have 10 losers in a row and sort of say, oh, it's okay, I traded 1 to 10, so the next one is going to win, it's going to take out all of the losses. This is just pointless. You're going to be suffering because you're going to be losing all the time, basically, if you're aiming for 1 to 10s, 1 to 20s. Yes, sometimes you're going to hit, but you're going to have to go through these phases where you're just taking loss after loss after loss after loss, and you cannot debate that because that's pure mathematics, right? If your stop loss is 2 pips and your take profit is, let's say, 16, well, probability dictates that your stop loss is going to get hit sooner than your take profit, based on the fact that it's 2 pips away your stop loss and your take profit is essentially 4 away at that point, right? Doesn't mean it won't happen. It just means you will have to suffer and go through these phases where you're just losing trades and taking loss after loss because you are expecting a big win, right? Which once again is a way to trade. I know traders with a 25 to 30% win rate and still profitable, but you have to be wired a certain way for you to actually be able to go through these phases, because most of the traders won't be able to understand the numbers game and will just end up blowing up, giving up, over risking, not doing what they're supposed to do, and failing, right? So you, whatever you decide you want to do in terms of your risk management, whether you want to be a trader that's essentially going for higher R and is accepting the fact that you're going to get stopped out quite frequently, then you have to accept that, right? Or if you want to be the type of trader who's looking, for a little bit of a balance in terms of okay, looking for 1 to 2s, 1 to 3s, maybe 1 to 1 if needed, then you're going to be much more successful in terms of taking wins. So traders, sorry for that. I just had to quickly stop the recording, but essentially I believe today's lesson is over. We went through a little bit of the risk management side of things, which is often overlooked, and how to actually go about mitigating risk and moving stop losses and things like that. Once again, remember, your best bet when it comes to mitigating stop losses and trailing is with structure, right? You have to look at structure. You have to see where we're breaking, where are we rejecting, and that will give you a leg up when it comes to managing your risk and trying to maximize whatever profits you want to take, right? Once again, it's a very personal thing, and you can absolutely be the type of trader that goes for higher R, but you have to understand the downside of that as well, right? So with that being said, guys, thank you very much for listening. I hope you guys enjoyed the video today, and obviously I will continue and try to provide good information for you guys to succeed. That's the main goal for this channel. It has always been that, help the YouTube audience understand a little bit of how I view the markets, which I don't suggest it's the best way to do it, but it's how I do it. So thank you very much for listening. Feel free to drop video suggestions below, and I will see you guys very soon. Take care, everybody.